Hello everyone, Mike Arnold here, co-founder, Pat Trading Partners, along Bob Igino. First, let me remove doubles no longer valid. I'm just going to clean up some of these levels right now. I don't like to do this off the video in case I delete something. Sometimes I do clean up something just because it interferes with my analysis, but that's about it. Let's see. Oh, got a question that I actually was trying to respond to, and I actually deleted yesterday. I did repost it in the comments, but I don't know if the person who posted it got the notification. So they were asking, because I've had talking about, with candle bodies and wicks, and why the bottom line here. I'll actually answer a couple questions. Why the bottom line is connects the wicks, the top cuts through and sort of touches candle bodies. Refer to my videos. They're on trend lines, because this is a trend line or a channel line. A channel line is just a trend line that forms a channel, and it is properly drawn using the wicks. And for trend lines and channel lines, you want to use the wicks. Now, for the other side, I generally use what's called a best fit line. A best fit trend line or a best fit channel line can cut through wicks and can connect bodies. What it does is it's the best fit. It's what visually looks the best, and for channel lines, it's very hard to get an exact parallel. I mean, we can copy this line and get a parallel, but it's very hard to get an exact line that then will connect with highs or lows. So that's why I use best fit lines on the other side. So for upward sloping channels like this one, I use a properly drawn trend line or channel line as per the three-part videos with an initiating point and a defining point. Then I copy it, and then I make it into a best fit line. So it's the same slope, or unless I move it accidentally a bit, but it's generally the same slope, and then it connects, and it's what's a best fit line, and a best fit line is what looks best visually, because in this upward sloping one, we're most concerned where if this bottom line's broken. So it has to be incredibly properly drawn with a set of rules. The top one is a zone for, again, taking profits. If it was downward sloping the other way, the top line would be the properly drawn one, and the bottom line would generally be the best fit one. Another question I got emailed to me was for doubles, do we use the wicks for doubles? Always. Double tops and double bottoms always takes the wicks into account, else it does not test out right. When I'm talking about utilizing candle bodies, I'm talking about significant levels. I'm talking about major support resistance areas to focus on. Everything else, then you like trend lines, doubles, you use the wicks. Head and shoulders, you use the wicks, because they're classic patterns. So hopefully I answered some questions with that. Let's take a look at today. The levels worked out. Whoa, they were amazing today. So little gap up, running up. We had 757.53 to 758.03. I was watching 757.50 to 758, running up there. What was the high? 758.06, reversing, eventually filling the whole gap. But you could also see that 755.59 poking above, and could not get above, then trailing off. Let me remove these levels. And let me bump these levels up, because we're going to do some looking at the other levels. So remember, you can always, when you have gaps, and the bigger the gap, it's better for this, but I'm just going to show it anyways to remind people. So you go from the prior close, I do this, to the high, and if the high changes, you got to look at it. First bar closed on it, so we held, we were looking for a close below the 62.5, or the first bar closed below it, so at that point I start watching for the gap fill. Doesn't matter if it rallies again. I'm watching for the eventual full gap fill, because it tests out that when it closes below the 62.5% high percentage of time, it fills the gap, and it did fill the gap. You can see here the gap fill. So that's a little thing that can tip the odds in your favor. Does it work every time? No, nothing works. If somebody says something works 100% of the time, they either are incorrect or lying, because I've never found anything that works 100% of the time. If it worked 100% of the time, it would stop working because people would find out about it. Then the more people that did it, it would invalidate itself. So gap fill. So that was the first target on the breakdown. Then doing the projections down. Right there was the first one. You can go to the jump to the 15 minute. 15 minute, that's the pausing bar. Remember, if you have the option to use the pausing bar on the next time frame higher, use it. So if you're watching the 5, you have a pausing bar. Use the 15 for pausing bars if at all possible, if they present themselves. If it's in a strong momentum move, then you use the same time frame. What else? So if you're on the 1 hour, use the 4 hour. If you're on the 4 hour, you try to get a pausing bar on the daily, etc. That gave us the 750.23 area. See, coming down there. I'm just going to focus on the major levels for the most part. 750. What was low? 750.21. This then gave us another pause. So at least on the 5 minute, you can check it on the 15 minute. And see, this is an instance where you did not have a pausing bar on the 15 minutes. So you needed new levels. You needed new levels because we already hit the old levels. Let me move this back. Okay, so this was a pausing bar on the 15 minute and the 5 minute. We came down, we hit 750, below 750.23 reversed. So you need to update your levels. Well, the first thing is to come here. And then I immediately check, do we have it on the 15 minute? No. So what do? I don't just not have levels. This is where I will leave it on the 5 minute. That gave me 748.25 coming down there, forming a little pattern, a slight little reversal, sloppy reversal, because it wasn't even a divergence there. I wasn't in front of the computer right then. And it did qualify as a double bottom. That was a double bottom reversal. Now at that point, if that double bottom reversal failed, then you'd have your next levels down, which you'd check on the 15 and see that's a pausing bar on the 15, and that can stay in place till tomorrow. Now we got that little double bottom pattern and then rallying up, and then you can start doing your harmonics the other way. So here's the first little bar, which at least gave you something, but again was not a pausing bar. But it gave you an area to target at least. Remember, that's why the 15 minutes are stronger. So that gave you at least a 752.90 to target as an area. But then once you get up here, but of course you target the 754.26 that we already had on the chart from before. But then you get, this gave another pausing bar. And that was on the 15 minute. See right here, back to the 15 minute rotation zone. And this gave you these levels. So it reinforced just above that. We had 754.26, which is the black line, then 754.37. So that gave the first little area. Coming up, hitting there, hitting there, hitting there, then going through. Then we had 755.08. Coming back down, and then let's go back to the 15 minute, coming into 15 minute rotation zone, retesting at 755.08, retesting at 755.08. That's why it's handy to make notes of the levels, because you could have moved it up here because you didn't know it was not going to break out, but you had a pausing bar there. So if it did continue higher, which it did not, you had 756.22 and 757.14. So what are we watching for tomorrow? Well, let's take a look at the bigger picture first off. So still an up close from yesterday, but a down close from the open. So it's still keeping the upwards trajectory, but waning momentum. We had some 760s go off, but not a ton of them. Let's see. Hold on. I'm just looking at my other computer for end of day totals, if it's going to give it to me. It was just refreshing. Yeah, we actually, end of day, we had 83,000 by the end of the day, so that was pretty That was actually pretty decent by the end of the day. Early it was waning earlier. I guess it picked up end of the day. I'd stopped watching it once we got to around that 760 area, because above there we just had the next, 770s were only in at 23,000. Then it was waning. So not much going in above there. Open interest going into Friday. The 800s, there's only 17,000. And the 780s, there are 19.5. So I'll keep an eye on that to see if we get any push higher. The 780s are close to where the upper channel is. We'd need a really big momentum move tomorrow to get that, because still a strong update in the NASDAQ and the S&P. But Tesla couldn't really get anything going. It seems like there's still selling pressure up here. Let's go back to that shorter term chart. Here's your 1 hour. 1 hour. You can probably get some minor support around 752.50. If we break down from there, it just isn't looking. Let me. 752.50. Then I'll. I'm not even gonna look at that much. 752.50, I'm just thinking right here, because I'm actually going to focus on right around 751. We had some reactions there yesterday. We had some reactions there, pausing here. The 1 hour close there, then that was the key closing basis. Remember, I like candle bodies the best. So I'm going to focus on that 751 area. Let me just mark that off. And I'm going to make that a slightly different color, just because it's not really significant. It's just something I'm using intraday. I'm trying to provide more information visually. Then if we get below there, then I'm focusing on that 749 to 747 area. We break down 746.73, 745.47. There's some minor levels in here. That's why I'm listing them off. My major areas, I really like this area too, the 749. These candle bodies, we had just below that about 748.92 to 749.30. We have some reactions in there, and it's bottom of the 1 hour rotation zone, so I will not ignore that area. And then below that, and you got the 4 hour rotation zone coming in. We're getting some separation there. When it collapses, don't really watch it, but that's my major support then, is that right around that 749 going into tomorrow. If you break below that, then I will really key off that 745.50, this bottom level with the bottom of the rotation zone. To the upside, 755.30 was pretty much, if you come across here, now this is where I will look at the wicks. Why? You see this key opening candle? This was a very key opening candle. The open was right here. I'll just mark this off again just to show you. It's going to come up the other color. Now you see this was a key open, gap open, ran up, and then collapsing. But look at all this selling right above there, and even coming into here. That's where I will watch that as a key level. We have one side of the candle body, but then we have all these other wicks really lining up with it, so that reinforces 755.30. Above there, minor 756.22, then 757.14, 758.06. If you want the minor levels above there, this is when, I've talked about this before, this is when you use the reverse harmonics, so the low at 10:45 bar Chicago time, back to this swing high. So these are the minor harmonics, 759.32, then 750.68. Then 762.98. Then you have your prior levels we've listed off many times before. If we really got through 764.45 on a momentum move, 768, 771, and then 778 are the key levels higher, but we'd really need something special to happen tomorrow. Other than that, that's about it. Just wanted to go through sort of videos a little longer. Those levels worked very nice today. Just wanted to recap, especially for the newer people here, how we draw all those levels. Wanted to have that discussion on the best fit lines versus channel lines or trend lines, and then that the fact that double tops and bottoms always takes the wicks into consideration. Let me know if you have any other questions, and I'll talk to you later. Bye for now.